On Wednesday, Alibaba was in the news for its Singles Day shopping season. 11 days, millions of orders and sales worth $74 billion. Yet on the same day, its shares plunged almost 10%. Why did that happen? Because Alibaba's founder Jack Ma has made a powerful enemy, the Chinese President Xi Jinping.
China's most powerful is taking on one of its richest. In most countries, this would be a fair fight, but not in China. Here, it's a no contest. Xi Jinping is the supreme leader. And Alibaba's Jack Ma learned this the hard way. At the center of this rivalry is the Ant Group, a fintech company controlled by Jack Ma. It was set to issue the world's biggest IPO, even bigger than Saudi Arabia's Aramco. But Beijing had other plans. The IPO was blocked just 2 days before trading was slated to begin. Reports say the order came right from the top, possibly from Xi Jinping himself. A $37 billion IPO was cancelled at the 11th hour. Questions were bound to arise. Why is Beijing going after the poster boy of Chinese tech? The regime says it is trying to protect investors' interest.
Here what I can tell you is that the decision of suspension is relevant. The Stock Exchange Department is fulfilling its responsibility of self-regulation. The decision is made by relevant exchange institutes based on laws to better safeguard capital market stability and protect investor rights and interests.
But in reality, this IPO is exactly what China needed. Beijing's motivations were more political than economic. Ant Group was described as China's JP Morgan. It had the power to disrupt China's financial sector, a sector that is controlled by China's 5 big state banks. It seems the party is not quite ready to let go of this control. Secondly, Jack Ma is losing favor with the Communist Party. Last month, he made a speech criticizing Chinese regulators. He said the system was outdated and accused state banks of a pawn-shop mentality. These comments are unlikely to have gone down well with the party. China's disdain for entrepreneurs is well documented, especially when they are outspoken. One example is real estate tycoon Ren Xiqiang. He once called Xi Jinping a clown, disrespectful at most, but in China it can only seal your fate. Ren is currently serving an 18-year jail sentence. After Ren, the party has now turned its attention to Jack Ma. He's the perfect target for Beijing. The world knows how rich Jack Ma is. It knows how big his company is. By cracking down on him, Xi Jinping wants to show the world who's the boss. It's an exercise in power, and it's not limited to Jack Ma. China is trying to rein in all powerful companies. Tencent, Alibaba, and Ant Group are the big targets. They have become too powerful for the party's liking. This fear of a crackdown led to a selling frenzy at the stock market. Over the last 11 days, Alibaba sold products worth $74 billion, a world record. Despite this, Alibaba's shares dropped almost 10%. It gives you a sense of how much power Chinese regulators wield. Alibaba's rivals had a similar fate. Tencent fell 7.4%, and phone maker Xiaomi 8.2%. In total, $280 billion of market value was wiped out. The message is clear. China's economy may evolve, its companies may grow, but the Communist Party and its leadership remains supreme. Bureau Report, WION. World is one.
Thank you for watching Gravitas on WION's YouTube channel. If you want to stay up to date with what's happening around the world, then subscribe to our channel and don't forget to like and share. Thank you very much for watching WION. World is one.